morning, friends. It's Paul Ward here, and I just wanted to share with you some insights that I had on the local Ventura County real estate market that I thought you might find interesting. Um, since COVID, prices have jumped dramatically. The average price of a home in Ventura County is now $900,000, and rents start at about $2,500 per month, unless you want to rent a room from somebody. You can save some money if you're renting a room, but rents basically start at $2,500 per month. Take a look at this graph that was put out by the local MLS, and you'll see that the average price of a home, this is for 2,000 square feet or less, average price of a home in Ventura County, 2,000 feet or less, is $650. But what I find interesting is that this is actually higher than it was in 2002, when interest rates were about a third of what they are now. You would think that with interest rates now at 6.5%, that prices would be lower than they were in 2002, when interest rates were as low as 2.5%. So it's pretty surprising that home prices have steadily risen, with some, various dips, of course, but are now higher than they were in 2002, when interest rates were in the twos. Now interest rates are in the mid sixes. Take a look at this chart showing the average home price in Oxnard. Okay, this is for homes 2,000 square feet or less. Average price $591 per square foot. That's asking. Median price $558 per square foot. And then on properties that have closed in the last 6 months, average price per square foot is $536. Median is $502. Now compare that to a town in LA County, Marina Del Rey, okay, high rent district, but also on the beach, just like Oxnard. This is for homes below 2,000 square feet, $873 per square foot. This is active properties, $873 active, average price per square foot, median $840 per square foot. Interesting, compare that to Oxnard at median $558. So $300 more per square foot in Marina Del Rey. As a realtor with many years of experience, when COVID came, there was a big rush to move and have space between neighbors, right? There was the fear of COVID itself, and everybody wanted to spread out, have no neighbors, homeschool their kids, have groceries delivered. And so there was a flood of properties, a flood of people wanting to move to Ventura County out of Los Angeles County. The second thing that I found interesting was the boss man said, hey, don't come to the office, work from home, right? So I could live anywhere. People could live anywhere. Why not move to Ventura County, where you're going to save $300 per square foot on your purchase price? And then the third thing was the incredibly low interest rates. Everybody felt that they had to buy because they were never going to have that opportunity again to purchase with interest rates in the 2% range, which of course is true. That interest rate is long gone. And if you think about it, Los Angeles County has about 25% of the entire state's population. If there's 40 million people in California, 10 million people live in LA County. And with prices being significantly lower in Ventura County than LA County, and the boss man saying, hey, work from home, where do those people want to go? They want to go to Ventura County. So that, in my opinion, it partially explains the reason for prices not having dropped, because in the LA County buyer's mind, if they're moving to Ventura County, they're saving so much on their purchase price that the fact that interest rates are so much higher really doesn't matter. Now, every year or every couple of years, Cal Lutheran University puts out an economic report, which I always find very interesting. It talks about the local economy specific to Ventura County, where Cal Lutheran University is located. And there's some interesting charts in this year's report, a little bit dated right now, but still, relevant. So GDP in Ventura County is essentially flat. It's actually down. For 2024, it's supposed to be negative 0.1. Ventura County has a shrinking economy compared to the United States, which is expected to be about 2% overall nationwide. So Ventura County's economy is somewhat depressed when compared to the nation. Another interesting chart in here is apartment costs continue to go up relative to salaries. So if you look at the yellow line, rents are going up while salaries are stagnating. And interesting also, they're saying in this report that wages in Ventura County are heavy in the $50,000 per year range. $50,000 per year is kind of a typical salary locally. Only about 5% of the homes out there are relatively affordable to folks making $150,000 or more. So there's a real lack of affordability. Now, of course, this leads to another big factor is population growth, or we could say here locally, population shrinkage. So actually in 2024 and 2025, Ventura County's population is expected to shrink by a little less than 1%, but still expected to shrink because homes are not affordable. And where are those folks moving that are making between $51,000 and $199,000? They're moving to Texas, they're moving to Tennessee, they're moving to Arizona, they're moving to Nevada. So with housing being unaffordable and folks that are just kind of starting out wanting to buy a home, start a family, they're moving primarily out of state. Now, some folks, of course, are staying, but there are actually more people leaving that are here now than are staying. And, in my experience, the people that are buying right now are Los Angeles County people, okay? They're coming up because in their mind, they're saving, right? If I'm going to spend $850 a square foot in Marina Del Rey and I can buy in Oxnard for $550 a square foot, I'm saving, right? Just talked to a gentleman last week who just sold his house in Los Feliz area of Los Angeles, 1.2 million, and bought a house in Camarillo for 715,000 and didn't blink, didn't bat an eye because, he's saving $500,000 on his purchase price. So he gave the seller what he wanted. Again, you would think with interest rates being where they are right now compared to COVID that prices would come down. But no, because the LA buyer is moving up here. The other interesting chart I found in the Cal Lutheran report was about housing starts. Okay, so what is the number of homes that are being built compared to the demand? Well, last year there were about 1,500 housing permits issued. To keep pace with demand, they would need a minimum of 5,000 housing starts. And really to bring the prices down in Ventura County, you would be needing to build about 30,000 homes per year, which I found to be a staggering number. So check out the chart that shows housing starts. So nowhere near does the supply meet the demand. So we're going to continue to have a housing shortage. Prices are going to continue to stay high in our region. Yes, there might be a little bit of a dip here and there, which, but that's going to be limited. Any dip is really going to benefit a very small percentage of the buying public. And then, of course, when interest rates do come down, what will happen is the demand will surge even more and we'll have more bidding wars. So there will be, 5, 10 offers on every property once interest rates do drop. So anyway, just a little bit of food for thought. I thought that was interesting. I wanted to share that with you. Certainly reach out, call, text, email if you have any questions or comments.